Hello everyone, Dividend Enjoyer here, and today I'm going to be doing a Chevron Corp stock analysis, ticker symbol CVX. I've had the thesis for a while that worldwide energy demand is going to continue to increase, especially with AI data training and just all of the new energy we're going to need for upkeep on everything, and just all the energy that's going to increase with more infrastructure and things of that nature. I also think that political factors are really going to affect the value of oil, including OPEC and including new tariffs that are coming in that might make it more advantageous for domestic companies to make more money. And I think that Chevron might be in a really good place to make a lot of money. They are very sensitive to the price of oil. So if the price of oil drops significantly, obviously Chevron would be in trouble. But I don't think that the price of oil is going to drop significantly into the future simply because the amount of energy demanded is going to increase. So the price is going to increase and the quantity supplied is also going to increase. I think that Chevron's in a really good position because it's very hard to start your own oil company, obviously. I also think that this company is great because it pays a really high dividend. Overall, I just wanted to get a value on this company because I thought it'd be interesting to own an oil producer along with Energy Transfer, which is already in my portfolio, which I think is a little bit safer than Chevron. I think that if we did a DCF and looked at Chevron's financials, we could get a good picture on what the company is actually worth and then kind of make a decision based off of that if it's something I want to add to my own portfolio, and kind of give this as something for you to see so that you can watch my video and then do your own research and make a decision based on all of those things to decide if you would want to add it to your own portfolio. So going through the stock performance of Chevron Corp, the stock is up 6.54% in the past year. The market cap is currently $285.05 billion. The price to earnings ratio is 16.32, and the annual dividend yield is 4.31%. The 52-week low of Chevron is $135.37, and the 52-week high is $167.11. Moving on to what analysts think of Chevron. Most analysts have a rating of either buy or strong buy, with 10 rating it a strong buy, 8 rating it a buy, and 7 rating it a hold. The analyst price targets range anywhere between $156 to $203, with the average analyst price target of $176.80. Moving on to the weighted average cost of capital for Chevron, I currently have a weighted average cost of capital of 6.79%. This is with a 1.562% cost of debt and an equity cost of 7.253%. And we can see here that the total value of the debt compared to the market cap is only 8.08% compared to the market cap weighting of 91.92%. So this makes sense that the weighted average cost of capital is going to be closer to this equity cost of capital. Now moving on to the free cash flow model valuation, my model is saying that on average Chevron's going to have to increase the cash flow by about 5% a year over the next 9 years in order for it to be near the even value for what the stock is currently trading for. I think that this is reasonable with average revenue growth of 11%, but we can see here that there is an outlier year between 2021 to 2022 where Chevron grew the revenue 51.48%, and they grew the free cash flow 78.07%. So as we can see here, the stock is very, very sensitive to the value of oil. It's not a very consistent stock with the revenues, which is to be expected. So I think that in order to be able to comfortably invest in this stock, you're likely going to want to look at what you think the value of oil is going to do. And I think this is very heavily reliant on OPEC and just other demands for oil in general, which I do think are going to be positive, but obviously the price matters a lot and there are a lot of factors that go into that. I can't give a definitive yes or no on if this is undervalued, and there are going to be very extreme highs and lows within this industry, but I think that the best bet would be to look for a year where Chevron does very poorly, a weird anomaly sort of year, and then get in during that time. But I also think that you could dollar cost average into this stock if you really want to own it, because I do think that this industry is going to be very strong into the future. And that's just my personal opinion. Obviously, I'm not a financial advisor and this is not financial advice, but I think it's very realistic that they could grow the free cash flow on average 5%. Now, if you're a dividend investor, I do think that this also offers a very strong dividend yield of 4.31%. And if we go back to the weighted average cost of capital, again, it's only 8.08% debt weighted. So you're not going to get into trouble with, a balance sheet that's extremely unlikable. So I think that this stock does offer a lot of really good things. But I also think that you do run the risk of oil prices going down and then being hurt by that. But I also think that with the Trump administration, you're going to have a lot of advantages in what you're allowed to do over the next 4 years. And I think that this stock very well could be undervalued as we're looking at it right now. I actually think that this could be a very interesting add to my own portfolio simply because the very favorable looking price to earnings ratio of 16.32, the nature of surprise upside and surprise downside years, because if I'm owning this stock and it has a really bad year, I'm going to be wanting to buy more. And if this stock runs up an extreme amount, it means that they're going to have more cash to be able to buy more infrastructure and do more things just in general. So I think if you can play this stock intelligently, I think you can make a lot of money. And I think if you're looking for something with slightly more risk and more inconsistent cash flows, which is something I'm not necessarily crazy about, I think that this is a good fit. If you're willing to hold this for the long term and you think that in the long term, generally oil prices are going to rise, I think that Chevron Corp is a great add. And I think that a growth rate of 5% of the free cash flow is very attainable and realistic. Now, if we change that growth rate to 0%, so if we pretend like the free cash flows are going to be completely static, we can see that the stock has 30.96% downside to it, but obviously analysts are quite bullish on it. And I think that 7% is probably not too far off from where it'll be. I think it's going to range from between 4 to 7% for an average free cash flow growth over the next 9 years. But I actually really think that because of the Trump administration being so friendly to oil companies, I think that there's a very high likelihood that we're going to get favorable laws and regulations that allow Chevron to grow at a higher rate. And I also think that it's in OPEC's best interest to not produce as much oil, but obviously different things can happen. It's not necessarily the most reliable organization in the world. So I think that there really is a lot of unknowns with this stock, and I think that's why it's very compelling. Again, the average revenue growth I think is a better metric than the average free cash flow, just because some years you're spending more on CapEx and different things like that. And the average revenue growth is very high. And again, that is caused by the 2021 to 2022 jump of 51.48%, but we can see from 2023 to 2024, it was only a dip of 1.78% in the revenue. I really just think that with global energy demand increasing, I think that it's more likely that the stock is a buy. But personally, I think I would rather own more Energy Transfer at the current prices just because it's more safe and more secure. But I definitely think that this is something that's going to be on my radar, and I may add to this in the future. I just need to think more about it and do more personal research as well into what I think the value of oil is going to be doing. So let me know what you guys think about Chevron in the comments section down below. I think that it's a very strong company. I think that it's also very inflation proof, just because once you put the money into the infrastructure, it's not going to increase because you've already spent the money in the past. So inflation isn't really going to catch up to you. And I also think that, again, the regulations are the really big thing to this stock, and obviously the oil prices are the most important thing. But I think that regulations will allow them to kind of take control of their own destiny and increase their growth more than they otherwise would have under a more liberal administration. But again, let me know what you guys think in the comments section down below. If you made it to the end of the video, please check out my other stock analysis videos on the playlist here. And please hit the subscribe button if you want to see more stock analysis or personal portfolio videos. Thank you for watching. Bye.